Hey you guys, what is going on? Shaquan here from SLFX Trading. And in today's video, really quick, I want to talk to you guys about reversals. Okay, so if you guys don't know, I'm a swing trader, which means I like to hold my positions for days, weeks, or sometimes even months at a time, just depending on the market condition and volatility and how price is flowing. So looking here on EURJPY, the yens recently had been pushing up and now they are all retracing or they're all pulling back, except for USDJPY because, she's just in a strong uptrend moving with the dollar index or the dollar because we have bullish news, right? But what I noticed about EURJPY is on the daily time frame, I'm going to take you guys up there. On the daily time frame, I could see that price started to slow down just a little bit, but we got this beautiful rejection inverted hammer, right? This beautiful rejection candlestick is an inverted hammer. Didn't really pay much attention to it because price can still keep going up even after making that candlestick. I mean, it made one right here, and the next day price still went up. But when I dropped down to the daily time frame, I thought, okay, well, this is an actual reversal. So here's what I mean. Multiple time frames are important because even though you can see price moving on bigger candlesticks, you still got to remember the wicks are even more important because wicks are candlesticks on higher time frames. Or I'm sorry, lower time frames. So if you guys notice, let's just go back to the wicks here really quick. We can see that price made a high, low, but then the following days, which is the 14th of September, price closed lower. And so I can't see the fluctuation on this time frame. So I went and dropped down to a lower time frame, which is here on the on the 12-hour time frame. Now I can actually see higher high, higher low, higher high, lower low. And this is when I went to my students and clients and said, you know what, guys, I think price can continue down, especially if we stay below the high of 145.64s. And if we do, this will be a trend continuation trade. I'm sorry, a counter trend against the trend down. So I'm already understanding the risk because counter trend trades don't always work out, and I don't trade those a lot. I try my best not to trade those often, but I knew that this could be a good opportunity to catch the pullback, and that's exactly what I did. So you guys, this was a, depending on how you will have taken this, not to the trade down a little bit more, but a 1 to 9.45 risk to reward trade. And so I set a pending order to put this trade on, also a sell limit, because one, I knew I didn't want to enter this trade manually. I've been working my butt off with teaching people how to set pending orders, but I've also been working my butt off with setting them a lot more because I found I miss a lot of my good trade setups when I don't set pending orders, and that's what I've been working on. So this was September 21st, and earlier that day I realized that price was pulling back, and I just went ahead and set a pending order. So if it did come and trigger me in, which was at the bottom of my zone, I could take the trade back down. And that's how I was able to get this 1.94 RR without even being on my price chart to manually enter the trade, without having to drop down to enter the trade. I just set everything up on the 12-hour, set the sell limit, got it out. There we go. And as you guys can see, I am up quite a bit on this trade as well. And if it does go through, you guys, then this will be a nice $4,000 week on this one pair alone. Okay. I've also taken profits on AUD, USD this week. I've taken profits on New Zealand dollar this week as well. All pending orders, all currency pairs with those two dropping as well. And I've only taken one loss, but because I moved to break even, which was Australian dollar, New Zealand dollar for a buy. You guys, trading is not the easiest thing in the world. It could be very detrimental to the mindset. It could play games and tricks on you. But when you have an organized flow and an organized step of when you come to the market, how you're going to trade the market, the direction you're going to trade the market, and you set those limits, and you also have rules for when you set trades to break even. You have rules for where your take profits are, your stop losses are, and you don't change those rules, trading becomes a lot easier. Okay, I've been trading for a few years now, and I've been teaching for a few years now, and one thing that I can say is that when you find a system, you don't tweak the system. When you see reversals, you have a set technique for the reversals. When you see trend continuation, you have a set technique for trend continuation, and you don't change it. You keep it going and you adapt to the market condition. You don't change the strategy to the market conditions. You adapt to it. Okay, But all is well. Good week in the market, you guys. I pray you guys were able to take some profits as well. If you were, great job. If you weren't, woosah, it's okay. Come back the next week and let's be great. I'll talk to you guys next week. Y'all be blessed.